All right, everybody, here we are back together again at last. We have a few things to talk about, and it's pretty big, so sit down and take a deep breath. Let's start off with the basics. As I am doing this video blog, stocks are higher across the board. Nothing major, higher nonetheless. No one is surprised about that follows this blog. That's the trajectory until it's not. I mean, are we going to waver around a little bit? Sure. But stocks are going up. I don't know how many times I've been explaining this to you. Seems like time immemorial. And we understand why. Now, let's look at a couple of other aspects of this market right now. Bonds are under a slight amount of pressure right now. The dollar is stronger. Now, why is that set up? Happening right now? Well, it's very, very simple. The European Central Bank. The European Central Bank this Thursday is going to announce their monetary policy decision. I mean, they have been broadcasting for months that, again, the ECB, European Central Bank, will do whatever it takes. That's Draghi's words. Now he's handing the whole, I'm going to say it, shit show over to Lagarde. And we know Lagarde has said to us already that she believes negative rates are good for the world economy. You can't make it up if you tried. Again, think about this. This woman is a convicted felon who never spent a day in jail. You know, there's us and then there's them. And that's sadly the truth. She could not get a job in 7-Eleven. She has a financial crime under her belt, but meanwhile she's going to run the European Central Bank. You can't make it up, but it's true. So this Thursday, the European Central Bank is going to come out with their decision on monetary policy. I am not a European Central Bank expert. That's the truth. I'll admit it here. I do consider myself a Federal Reserve watcher expert. I've only been wrong one time ever since I've been calling what the Fed's going to do. But this is what I think has a very, very high probability of happening. And it's being reflected in the bond market today, in the dollar, the euro. The ECB is more than likely going to announce a rate cut, more quantitative easing, and guidance that they're, again, willing to do whatever it takes to support stock prices. Now, again, it's not being explained to, unfortunately, anyone, by anybody, how this is good for the middle class. Again, the middle class just sits there and takes it because they've been made zombies. Not you, but for the most part. They just don't open their mouths. They let their lives be ruled by these entities. So again, this Thursday, that's going to be Fire 1. Fire 2 is going to be the Federal Reserve at the end of this month. And I think they are going to coordinate their action. We're going to get a announcement by the European Central Bank that they are willing to and more than likely will support the markets at all costs. It doesn't matter how this hurts the middle class. And then the Federal Reserve is going to follow that up the end of this month with another salvo or Fire 2 and to support this stock market. But again, mark my words right here and right now, and I've been beating this to death. What the ECB does this Thursday and what the Federal Reserve is going to do at the end of this month, I think it's hold that thought, I want to tell you exactly when that is. Tuesday. Wednesday. Wednesday the 31st, the Fed is going to announce their monetary policy decision. It's going to be a Fire 1, Fire 2 salvo at this market. And it's not even so much, in my view, at this point, and I would imagine most of you will agree, it's not so much how much they cut. It's a signal to the market. That's all it is. It's a signal to the market, or round one, that they're going to do whatever it takes to keep stock prices propped up at the cost of the middle class. That's it. Nothing is real anymore. You know that. So let's summarize real quick. Stocks are higher right now as I am doing this video blog. Metals are under a little bit of pressure here. Let me check that. Actually, no. Look at that. They reversed. Metals are up higher right now as I am doing this video blog. Very volatile lately with metals. Cryptocurrencies are down across the board. And there's a lot of reasons for that. I think that the fear that there may be regulation put forth is putting a little bit of pressure on cryptos. I still think that cryptocurrencies are a better bet than any of these central bank issued fiat currencies. I really do. But that's just my take right now. We're going to experience the dollar getting hammered, euro getting hammered. The rest of the world central banks are going to do the same thing. Middle class is going to suffer. No one's going to explain to anybody why this is good for the middle class, but they're going to follow along like the sheep that they are. Again, not you. All right, so with that said, pretty much that's it. Let's see what the ECB does this Thursday, and let's watch the follow-through with the Fed. Let's watch how stocks respond to this. With that said, I think I outlined a lot of important things here. If you would agree, I would greatly appreciate you sharing this video. Get it out there. And for those of you who have asked, I will bring Prince out. You want to see him? I got him. Come here, little boy. Come here, you. Ah! Here he is. He's back. Prince is back. He's a good boy. He's really good. Most of you know I got this guy from the shelter last Friday. Not this Friday, just past the one before that. And he has been an absolute pleasure. And he's so good. He's so happy. All right, that's it. Say goodbye. I'll see you all later.